CTM. Happy Friday, everyone. So excited to be here for this Friday session together. I really just love all the time that we spend together on the Friday sessions. Always a little bit lighter, more relaxed. And well, I don't know that this session is going to be that way. This session, I actually have a strong focus. And I want to talk about and I want to get into some of the differences we were talking between CTM 1.0. Let me see if I could read this. This message came up yesterday. Jordan, during the live stream, could we go over what made the switch from CTM 1.0 to CTM 2.0? I'm not very active on the Discord, so it could have been discussed already. I'm on the live streams every day, though, and I don't understand the reason behind the change. Are you still using 1.0 at all? So I want to start off with that, and there's other things that I want to talk about as well, including what it looked like the last time the Fed was hiking and taking and running off the balance sheet, how Bitcoin acted. Obviously, there was this big drawdown from the time the QT program started. How interesting that it's a similar, if you picture the S&P 500, you're looking at Bitcoin here, and picture this was the March 16th Fed meeting, and that strong rally out of it, that sharp rip, which was just sold off just as quick, except in real time on the equity markets, prices come in and made a lot lower low and leg down. But nevertheless, from when the program started for quite a while, we saw continued pressure, Bitcoin. And during this period, you're looking at two things. You're looking at the Fed's funds rate continues to increase. They continue hiking rates, and they hike them all the way till December 2018. And they're also running off the balance sheet QTs in place. Now, even when Bitcoin bottomed, right, one thing happened. That was the last rate hike. However, they still kept QT going, right? And QT was about halfway through the QT program that Bitcoin then bottomed. And Bitcoin not only bottomed, it went on a massive run where it went from like 3,200 to 14,000 in 6 months. Is that type of behavior going to be happening going forward? Or at this point, is the halving different? Are we looking at new cycle structures? There's a lot that I want to take a look at. And specifically, well, let's start over here. Let's start with the difference between CTM 1.0 and CTM 2.0. And with that in mind, there's a lot I want to cover. If you look at what happened with CTM 1.0, there's a lot of, it's really good TA. If I had to recap CTM 1.0, I would call it TA is art or something along those lines. And again, this is all happening in real time. This type of 4-year cycle awareness that led to what CTM 1.0 ultimately became started really right around the 2018 bottom, or at the 2018 bottom, right, for myself. And that really helped ingrain the 4-year cycle behavior in myself and really get a good grasp and be able to not only front run myself the 2024 halving, but help a lot of other people understand the value proposition on that as well. And then from the point where the bull market started, this big, massive wave up, this leg up, the way that we were really going about trading it started off as price came off, whether it was 10, 15, 20, 25%, use that as a place to go ahead and lean in and buy. That was sharpened up along the way until the lines of repair were added, and then ultimately even the black diamond and double black diamond entries. And it's a really good way to navigate the markets and to be able to profit them with the strongest risk reward possible. However, it's really not the best. And why I say that and started off with, in the very beginning, it was all based around that 4-year cycle awareness. That 4-year cycle awareness also helped to understand when things were different. When we broke below, for example, the peak of wave 1, 4-year cycle awareness helped us understand, well, that's different. Something's changing. Things are different. Now, there are other people who were able to see it a lot earlier. It was during this area over here in the summer that Willy Woo started talking about what potentially a new structure looks like on Bitcoin. And we spent a lot of time with that at the time, only because it didn't sound right. In my view, in my mind, even though that this 50% drawdown occurring over here mid-cycle was a little bit unexpected, nevertheless, it still fit very much into the rhythm of the 4-year cycle up until over here in December when we broke down over there and had that big technical break. Yeah. So going forward, I don't have that edge that I had up until even as far as this point, right? Because it was based off that 4-year cycle behavior. And it is potentially possible we still see certain aspects play out, or maybe more than right now that I think that they would, or maybe much less. And at this point, we will continue to discuss them all. There's a lot to talk about. Let me keep going. There's a lot I want to get in. This is a very important conversation to have, the differences between CTM 1.0 and CTM 2.0. Let's go a little further, though. Let's go back to what occurred up until this point. Obviously, CTM 1.0 and that cycle awareness helped take advantage of this particular point in time. There were a lot of people very bearish on Bitcoin over here and didn't know what happens next. We were very confident that we would see new all-time highs. Not only that, but even able to call about, I believe it happens by October. All those things continue to happen on time and with pretty sincerely good precision. After the breakdown over here on CTM 1.0, there was, I like using the yellow trend line a little bit better right now. There was an entry over here, CTM 1.0, right? And the stop loss on that is one of two places. In this particular case, instead of using the lowest wick, I personally used over here, and we talked about them both. Nevertheless, it's a small loss. I'm going to quickly look at CTM 2.0. What happened next, and everyone's aware, the next was February 4th. The next entry over here, CTM 1.0, right? Again, the stop loss is supposed to be the bottom of this wick. Yeah. The one difference in this case, instead of using the one bottom of the wick coming in just above 33,000, I said, the break of 35,000 was a big technical breakdown. It makes sense to go ahead and use that instead of the low of the wick. It did save, a couple of $1,000s. Nevertheless, those are the two entries you had on CTM 1.0 on the long side. Now I'm going to add CTM 2.0, and I have two different versions over here. The second version is the short side. I'm not going to focus in on that just yet. First, I want to focus on the long side alone. So over here, the CTM 2.0 does get you long. At the same time, CTM 1.0 got you long. The only difference is that CTM 2.0, it exits the trade a lot sooner than CTM 1.0 exits the trade. And then the same thing occurs over here. CTM 1.0 and 2.0 that February, both of them going long. The only difference is CTM 2.0 was able to take profit, where CTM 1.0 wound up taking a loss on that trade. So that's the difference. CTM 2.0 also able to take a nice bit of profit in this area over here. And then since Bitcoin $45,700 has had you on the sidelines, so there's a distinct advantage between two strategies. And by the way, let me just show you over here what happened. Obviously, during this period, CTM 1.0 and 2.0 both performing well. But CTM 2.0, you could see where you go long, right? And then you get the exit. It's far superior to CTM 1.0, but it was CTM 1.0 that led to the eventual development of CTM 2.0. I hope that's a good explanation, and I want to go further by just backing it up with a little bit of data. We're looking at that same period over here. We're looking at the 1st of April 2021 where Bitcoin topped, and this is looking at the long side only. It's looking at it on the 8-hour time frame with the settings, and it's showing with this is a 1.6% stop loss, and it's up 17%, while Bitcoin is down over 50%. So just long side only, there's a clean and strong case for why you want to be deploying some type of strategy like CTM 2.0. But if you add in also, I myself to this point have not found a better way or a better setting for the short side. The work that Michael is doing on Ethereum on the short side with Reza and the Kalman filter on top of CTM 2.0 with the specific settings seems really, really good. A couple of 100% profit on the short side over, since like 2017, 2018. It's really advantageous. Now, I want to show you if you were just trading. Now, we use better settings. I just showed you it's 18% over the same period of time since April. This is with settings. It's important. I let you know this. These settings are still good, but the seems superior. And pretend that you have on the long side, not the period, but which is 18%. I'm going to just show you the short side only right now. And you can see over that same period, on the short side, I was able to put up 22%. The thing is if when you add that 8% on the long side with the short side together in this environment, it's even better. Now, if you had instead of the long side at 8%, at 18%, and you add both, it would be way, way superior. The reason I bring that up is to show you is this. If I go ahead and actually switch to the short side now during that same period, now if you go back far enough, it's hard to argue the short period at all. If you're looking at what's happening in this current environment and or that we might be looking at moving towards a prolonged recession, maybe even something that lasts a couple of years, and you have no idea what that might or may or may not look like, you might want to be protected by executing on the short side as well, even if it keeps you more or less close to break even. Yeah, it's something to really think about and discern. For myself, why I know the 23-33 period looked, this current set of circumstances was one of the few periods where it performs really well. And you could see that just recently over here. This is, around the break of 37,000, actually. You see that CTM 2.0 taking you short and then closing up a nice trade. It was like an 18% gain or something like that, or a 15% gain. And it's a nice gain, and it really helps on the downside. Now, those don't happen too often. Even going back to this period over here, this was not very profitable on the short side. By the time you start picking up shorts, price already dumped. But it does protect, I guess, the flow of the slope of the balance sheet over time.